Thank you for connecting to this Inter-Entity Transactions training video. My name's Anne from Orchid Systems, and today I'm going to be running through the cash management functionality within Inter-Entity Transactions. Inter-Entity Transactions allows you to automate loan account entries between different entities, denoted by a segment in the GL. This is covered by a separate training video. It works within one Sage 300 company database and/or across multiple Sage 300 company databases. Due to and due from loan account entries or transactions are generated automatically. Because it works at the general ledger transaction level, it works across all subledgers, regardless of their origin. It balances transactions by entity at the general ledger account segment level. But using inter-entity transactions, you can also auto-create accounts payable, accounts receivable, and/or general ledger reallocations, extra AP, AR, and GL transactions. This too is covered by a separate training video. You can automatically trigger additional transactions to automate complex inter-entity transactions. Inter-entity transactions also provides cash management across multiple databases, and this is what this training video covers. It allows you to process bank transfers between companies. You can also allocate payments or receipts for invoices in one company using a bank account in another company. You can also transfer invoices, accounts payable and accounts receivable, from one company to another company for consolidated payment processing. There's also a consolidated accounts receivable and accounts payable age trial balance, which allows you to report on the same customer and vendor across multiple databases. In inter-entity transactions cash management, there are transactions that can be automated between Sage 300 company databases. You can automate bank transfers between two Sage 300 companies in separate databases. You can also apply payments to AP invoices in one company and use the bank account of another company in a separate database. You can also apply receipts to AR invoices in one company and use the bank account of another company in a separate database for the deposit. You can also transfer AP invoices from one company to another company in a separate database for consolidated payment from the other company. And similarly, you can transfer AR invoices in one company to another company in a separate database for consolidated receipt application in the other company. To illustrate this, we're going to do 3 examples. We're going to do a bank transfer between Entity 1, Orc Limited, and Entity 2, Orc Inc. 2. The second example we're going to do is an AR receipt applied to invoices in Entity 1, Orc Limited, and the receipt will be deposited into Entity 2's bank account, Orc Inc. 2. The third example we're going to do is to send AP invoices from Entity 2, Orc Inc. 2, to Entity 1, which is Orc Limited, for consolidated payment. We're also going to run the AP and AR age trial balance. This is a consolidated trial balance across multiple companies. In this training video, we're going to run through the activation of inter-entity transactions. We're going to install and activate, check the license, and assign the visual process flows, which helps with the setup and transaction processing. Then we're going to do the configuration required for cash management. In IET setups, we're going to look at the cash management tab for the options. In bank services, we're going to create clearing bank accounts, and we're going to configure those clearing bank accounts in cash management banks. And we're going to review the options for two-step processing for mapping vendors to customers in the cash management APAR setup, and also the use of receipt selection codes to automate receipt creation. Then we're going to go ahead and process transactions. We're going to enter the source transaction, be it a bank transfer, an AP payment, or an AR receipt, and post that and see the resulting bank entries and batches if required. And we're also going to look at using Create Receipt Batch to automate receipt processing. And while processing, we'll check the cash management audit inquiry for any errors and how to use the inter-entity transactions periodic processing to reprocess errors if they occur. All our programs can be downloaded from www.orchid.systems. First, you log into our website, click Product Downloads, select the version you want, and then scroll down to find your module. Inter-entity transactions is one download for single, multi, and trade, and it's your serial number and activation code that allows you the different options. Once you have downloaded inter-entity transactions and run the install shield, you go and activate in those companies which you want to use inter-entity transactions. And for cash management, you need to activate in all the companies which are to be the source of the transactions. For example, where you want to record the bank transfer or the AP payment or the AR receipt. And after activating, we recommend you go to assign the visual process flows and assign the users, administrators, and users the process flows for cash management, which assists in the setup and processing of cash management transactions. And after assigning the cash management visual process flow, you should check your license. And this installation is licensed for multi-company, which includes cash management. Cash management is only part of inter-entity multi-company. We're going to review the setup for cash management based on the three different transaction types: bank transfers, one-step processing, and two-step processing. The first example we're going to do is a bank transfer. We're going to transfer from Orc Limited to Orc Inc. 2. In Orc Limited, when we do the bank transfer, it's going to credit the Orc Limited's bank account and debit the clearing bank account for Entity 2. And then inter-entity transactions, cash management, will automatically clear the Entity 2's clearing account and debit the due from Entity 2 in Entity 1's books. And then it will, in Orc Inc. 2, do the transfer. So it'll deposit the $1,000 into the CCC bank account in Orc Inc. 2 and credit the loan account with Entity 1. Using the inter-entity transactions cash management visual process flow, we have the cash management set up at the top half of this visual process flow and the using cash management as the bottom half of the visual process flow. For cash management, we are assuming that you have already created your entity segment in the GL, defined the segment values, and created your GL accounts that you need for your clearing bank accounts for target companies. In this case, GL account 1992-1 is a clearing account for our Entity 2's bank account. And in Inter-Entity Options on the Segment tab, you have selected your entity segment. For cash management, your options are on the Cash Management tab. And to use cash management, you need to turn on Use IET Cash Management. And then you would turn on the different options that you need. For bank transfers, we need to turn on Allow Bank Transfers. Inter-entity transactions creates the source and target bank entries to route the bank transfer through the loan accounts between the entities. And you can optionally choose to auto-post those bank entries. And for your bank entries, you need to configure the source transaction bank transfer fields and where those fields go in your bank entry that gets created. You can also include the user ID and the organization ID from the source company. And cash management relies on the transaction routes already being defined and the entity database mappings being defined. After setting up the options, you need to create a clearing bank account for each of the target banks. So in our case, we're going to do a transfer to the CCP bank in Entity 2. And the account for this clearing account must be an Entity 1, the same entity as your source, because inter-entity transfers to the target company using a bank entry, not using a GL loan account being automated when the GL batch posts. And then in the inter-entity cash management setup, you need to configure your source bank code. So E2CCB is a clearing bank account for one-step processing to the target entity of entity 2, and this is the bank account to be used in entity 2. So this finder is on entity 2's database. The processing type has no effect for bank transfers. We will discuss the processing type with the other examples we're doing. Once our configuration is complete, we can go ahead and do the bank transfer. When we post this transaction, Inter-Entity Transactions creates a bank entry in the source database to clear out the clearing bank account and does a bank entry in the target database to do the deposit in the target database. And these transaction numbers are in the cash management audit inquiry. So for our bank transfer, for the source bank transfer of TF11, a bank entry TR14 was created in the source database and TR10 in the target database. Opening the bank entry in the source database, we see the withdrawal from our clearing bank account using the loan account with entity 1 and 2. And in the target database, Orchid 2, we see the deposit using the loan account with entity 1 due to 1. And the final consideration you have for bank transfers is the cash management clearing account. You need to fill this in if you have the scenario where the routes between the entities, in this case entity 4 and entity 1, are multi-level. So you need to specify a clearing account to trigger the automatic loan account entries between the different levels, as cash management will do the bank entry in the source database and the target database. But for the loan accounts to be affected in the hierarchy, you need to have a clearing account for the entity of the first leg of the routes. The next example we're going to do is to illustrate cash management one-step processing. We're going to apply a receipt to invoices in one company, but do the deposit of the receipt into a bank account in another company. And we say one-step processing because only one transaction needs to be posted in order to achieve this effect. And it works in the same way whether we apply a receipt to invoices and the deposit happens in a target database, or whether we apply a payment to invoices and the withdrawal happens in a target database. But we're going to use an AR receipt in this example. In Entity 1, Orc Limited, we're going to do an AR receipt and apply it to invoices in the same entity. But the deposit is going to happen in Entity 2's bank account. So in Orc Limited, when we apply the receipt to the invoices, it's going to debit our clearing bank account and credit AR. And then when that transaction posts, we're going to get a bank entry to clear our clearing bank account and an entry in the due from entity 2 in entity 1's books. And in entity 2, we're going to get the deposit happening. So debit to the CCC bank and credit to the due to entity 1 loan account. Using the inter-entity transactions cash management visual process flow, we have the cash management set up at the top half of this visual process flow and the using cash management as the bottom half of the visual process flow. For cash management, we are assuming that you have already created your entity segment in the GL, defined the segment values, and created your GL accounts that you need for your clearing bank accounts for target companies. In this case, GL account 1992-1 is a clearing account for our entity 2's bank account. And in Inter-Entity Options on the Segment tab, you have selected your entity segment. For cash management, your options are on the Cash Management tab. And to use cash management, you need to turn on Use IET Cash Management. And then you would turn on the different options that you require. For our example, we need to allow the one-step AR receipts, and we have elected to auto-post the bank entry that gets created when we post the AR receipt, the bank entry that gets auto-created in the source database and in the target database. and the one in the target database is to the deposit into the target database. But it's the same if we were going to be doing AP one-step processing. We would need to allow one-step AP processing and choose whether or not we want the two bank entries to auto-post or not. For the AR receipt one-step processing, we need to define from the source AR transactions where the information is to go on the target bank entry. And we can optionally include the organization ID and user ID as well. For the AP one-step processing, we can also define what fields from the AP payment go to the bank entry in the source and the target database. And we can optionally include the organization ID and user ID too. And for cash management one-step processing, you need to define the routes between the entities, in our case between entity 1 and entity 2. And we also need to find the entity database mappings. And in Common Services Banks, we need to create a clearing bank account for the target database. And the accounts of the clearing bank account need to belong to the source entity, because we don't want inter-entity loan account entries to be happening when we process against this clearing bank, as inter-entity transactions will be doing a bank entry in the target database. And the final setup is to define our source bank account, our source clearing bank account, E2CCB, in inter-entity transactions cash management bank setup. And in this case, we want to make it a one-step processing. So with the source transaction posting, with that one step, the target bank entry will be created. And the target bank entry will be created in Entity 2 for Bank CCB. And this finder is a finder on the banks in Entity 2. We have done the setup required for cash management one-step processing. And we're going to process an AR receipt in Entity 1 using our clearing bank account for Entity 2 of $500. And this $500 is applied to Invoice 3 in Entity 1. Posting this batch, we can see that Inter-Entity Cash Management has created a bank entry in the source database to clear out the clearing bank account and a bank entry in the target database to do that deposit. And we can see those bank entries in the cash management audit inquiry. I'm currently filtering by clicking Control F for just AR receipts. And we can see that bank entry 16 in the source and bank entry 12 in the target was made for this receipt we've just posted. Checking our bank entries in the source, we can see the credit to the bank account for the $500 against the loan account with Entity 2. And in Entity 2, we see the bank entry against the loan account with Entity 1 for the same $500. And the last example we're going to run through is cash management two-step processing. And this is the process where you can transfer invoices to another company for consolidated processing. We're going to do cash management two-step processing for accounts payable. So we're going to send accounts payable invoices to Entity 2 for consolidated payment and processing in Entity 1. So in Entity 2, Orchid 2, we're going to do an AP payment and apply the AP invoices to Entity 2. These applied invoices will be transferred to Entity 1 via the loan account with Entity 2 for consolidated processing once posted in Entity 1. So in Orchid 2, when we first do the AP payment and apply it to the invoices, we're going to get a debit to the AP control account and a credit to the clearing account for the bank account in Entity 1. And when that payment is posted, inter-entity transactions will do a bank entry to clear out the clearing bank account and to credit the due to Entity 1 in Entity 2's books. And at the same time, cash management will transfer the AP invoices to Orc Limited for posting. And the expense account on the AP invoices will be the loan account with Entity 2. In this example, because Entity 2 is the source of the inter-entity transactions, we need to configure inter-entity cash management in Entity 2. In the GL, on the Segments tab, we need to define our entity segment. We need to define the valid segment values. In GL accounts, we need to create any GL accounts we need. In this case, we need a clearing account for the Entity 1's bank account. And in inter-entity options on the cash management tab, we need to turn on inter-entity transactions and select the options we want. Because we want to do two-step processing of AP and AR from Entity 2 to Entity 1 for consolidated processing, we have selected Allow two-step AP payment processing and Allow two-step AR receipt processing. And we've elected to auto-post the source bank entry and the target AP payment batch once it's created. And we also need to define from both AP payments and AR receipts what fields are to go onto the bank entry. And you can optionally include the source organization ID and user ID. And we also need to define our transaction routes, in our case between Entity 1 and Entity 2, and define the entity database mappings, so we are able to create the transactions in Entity 1. We also need to create the clearing bank account for Entity 1, and the accounts for this clearing bank account must belong to the current entity, so -2, as Orchid 2 is -2. This is because we're going to debit the loan account in Entity 1 via the AP invoice that we're transferring to Entity 1. We do not want GL loan account entries to be automated. And in cash management bank setup, we need to define that same bank account and say it's a clearing bank account for our Entity 1 and select the appropriate bank account in Entity 1, CTAC. And in this case, because we're transferring invoices, it's two-step processing. So we need to first post the payment in the source, which will create an AP invoice batch in the target, which also needs to be posted, and then the final payment happens from the target database. That's why it's called two-step processing. We're going to process this AP payment of $400 against our clearing bank account with Entity 1 and apply the AP payment to the invoices that we want to transfer to Entity 1 for processing. And when we post this batch, Inter-Entity Transactions creates a bank entry to clear the clearing bank account and creates an AP payment batch in the target database. And in the cash management audit inquiry, we will see the bank entry in the source and the batch number of the target AP invoice batch. Checking the bank entry in the source, we see the bank entry to clear the clearing bank account with Entity 1 using the due to 1 in 2's books loan account. And in Entity 1, we find the AP invoice batch with the two invoices that we applied the transactions to, Invoice 20111 and Invoice 2012. Inter-entity transactions appends the source database to the beginning of the invoice number and a counter -1, -2, -3 to ensure that the invoice number is unique. And the expense account on the AP invoice is the loan account with Entity 2. If you are using cash management two-step processing on the AR side, that is, you want to send AR invoices to another company for consolidated receipt processing, so national accounts across companies, you may want to use receipt selection codes. In inter-entity transactions, you can create receipt selection codes for your cash management banks. And using these receipt selection codes, you can select invoices by all these different criteria. In our case, we're selecting by account set equal to interco. So all open invoices for any customers in our intercompany account set, it's going to create a receipt batch and optionally post or not post that receipt batch. You can also elect to include credit notes, prepayments, unapplied cash, and debit notes, and you can specify customers and documents for exclusion. Once you've created your receipt selection codes, you can use Create Receipt Batch to create an AR receipt batch against your cash management clearing bank account to transfer those invoices that the receipts are applied to the target company. In our case, all customers in the intercompany account set. And checking that batch, we've elected not to post the batch, so we can now check the batch, do any changes we need to, and then post. And at that stage, inter-entity transactions will clear the clearing bank account and transfer the invoices to an AR invoice batch in Entity 1. If any errors are encountered, for example, our customer 9001 does not exist in the target database, these will be recorded in the audit inquiry. And we can see customer number 9001 does not exist in the target database, that is in Entity 1. Once the problem has been fixed, in this case creating the customer 9001 in Entity 1, then the error can be reprocessed through the inter-entity transactions, periodic processing, cash management, and on the Cash Management tab, you select which documents that you want to reprocess. In our case, the AR Cash Management error entries. And the bank entry and target batch was created. Checking in the IET audit inquiry, we see the source bank entry has been posted and the target invoice batch has been created. Checking first the source bank entry, we see the transfer via the loan account with Entity 1. And in Entity 1, we see batch 91 with the 5 invoices being posted via the loan account. The typical errors you get in cash management audit inquiry regarding transactions which are not being able to create it is locked periods for the bank entries, or locked vendors or customers, or inactive vendors or customers for two-step processing, and currency issues on the general ledger accounts for bank transfers and one-step processing. And the final configuration you have for cash management two-step processing is the AP/AR mapping. So if you have the scenario where you're sending AP invoices or AR invoices from Orchid 2 from one entity to another entity, in our case to Orc Limited, you can optionally choose to map the vendors and customers. So it's AP to AP mapping or AR to AR mapping. In this case, we're saying invoices from vendor 1200 will go to invoices for vendor 1400. And we could also have an AR to AR mapping, for example, from customer 1200 to customer 1500. And the final piece of functionality in cash management is the Consolidated AR trial balance and the Consolidated AP trial balance. In the IYXXA ENG directory, we have 4 custom reports, 2 for AP and 2 for AR. And these need to be put either into the AR and AP ENG directory or into your customization directory. And what we have done is amended these reports to include the company ID of the transactions. When running these reports, the standard AR and AP age trial balance is run, but the process is run in all the databases that are part of the entity database mappings in this particular source company. The process is run in each of the companies and the appropriate records copied across into the source for consolidated reporting. And here we have some transactions from Orchid 2 and Orchid 3 and Orchid 4. Similarly for the AP age trial balance. And here we have some transactions from Orchid 2, Orchid 4, and Orc Limited. We have seen the setup and configuration required for inter-entity cash management. In GL and Common Services, we had to create GL segment values and a GL segment code for our entity. We needed to create some GL accounts for our cash management clearing bank account And in Common Services, we needed to create our cash management clearing banks. In inter-entity transactions, we had to configure our cash management bank transfers, one-step processing and two-step processing in each of the companies that were a source of these transactions. We had to create the appropriate cash management banks. And for two-step processing, if needed, we needed to configure AP/AR mappings, our receipt selection codes, and if we wanted to run the consolidated AP and AR age trial balance, we need to have our entity database mappings entered. Then we saw how to, when we posted bank transfers, AP payments, and AR receipts, the resulting bank entries were created for us. And we checked the cash management audit inquiries for any errors and used the periodic processing to reprocess error entries. Thank you for watching this training video on cash management. For any other questions or other training videos, please go to our website, www.orchid.systems, to find more information on inter-entity transactions and our other products.